I really want to hit that $1 million price prediction by 2030. And I have your chart. The bear case is 258,000 per Bitcoin. The base case, 682,000, and the bull case, 1.48 million as your price target. Because folks out there, again, they think they're late, but this shows that, I mean, the compounded growth rate every single year, they're very, very early, and this has a huge asymmetric potential.
And those are pretty conservative assumptions, we would suggest.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. I do apologize for the lack of videos, but I told you guys I had a very busy week. I'm getting ready for a very, very long trip that I'll be making, and also it was my sister's wedding. So there was just a lot going on this weekend, but considering that Monday is fast approaching and everyone's concerned about what this could be for Bitcoin, the fact that, you know, a lot of people are pointing out, oh, we lost this upwards trend right here. This is bad. Well, again, as I was explaining, we're not in a parabolic bull market. I think that's pretty obvious. In fact, a lot of people are quite bored right now. Let's be realistic, right? You could say maybe this is more of a, you know, sideways crab, kangaroo, whatever you want to call it type market, right? We're just kind of bouncing around these areas. But really what I'm looking at is just a very, very simple fact that we had this resistance that was holding us down. And considering that most people are saying, hey, it's a bear market, right? Because we were at 70 and now we're only at like 26. So clearly this is a bear. But again, you do look to lose these structures, but then what you have is regaining the resistance acting as support. And considering that we have 1, 2, and now a third, right? So we have a higher high and another higher high. This is things that we need to pay attention to. And I do try to ultimately sort of show people what's really happening in the background, because it's very easy to get bored or to get sucked into the doom and gloom, especially with what's going on right now. You know, globally, obviously, there's a lot of situations, but maybe you had heard about the grayscale news, you heard about what was happening, and the fact that the SEC has chosen not to appeal against Grayscale Bitcoin Trust Bitcoin Spot ETF is actually leaving a lot of clues, right? And, you know, you've heard these crazy Bitcoin predictions, right? Kathy Wood, I mean, you obviously know, talking about these $1 million potential Bitcoin price, predictions. But realistically, you know, it's fun to throw numbers around and all that, but is it actually possible? I mean, if you just realistically look at the mathematics, do we have any evidence against that? Well, of course, this is all just speculation, but we can look at real data, and we have real data right now. And that's what I want to discuss. I want to show you what is happening. Again, we have on-chain data. We also have data from some of the major exchanges. We also have whales doing something that we've never seen before, right? And the situation, for example, even just with Fidelity, they had a recent report that came out. All of these are sort of leaving us clues. Now, of course, there is that potential looming death cross, which we've never seen before ever in Bitcoin's history, which I talked about, which could be something to be very concerned about, right? But we haven't quite reached that point yet. So what I want to talk about today is just a lot. There's a lot of content, guys, because, you know, I've been out for a few days. So make sure you stick around to the end. I have a lot of things we need to go over. You know, where are we in the cycle? You know, is it all just being propped up? Is the ETF bad? Right? People are saying it'll cause manipulation. So if that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. And just kind of before we move on, I just wanted to personally throw this out there. You guys know that I love to share videos, right? I mean, because listening to me talk for 20 minutes, right, could get kind of boring after a while. I enjoy sharing videos about Bitcoin content, but unfortunately, it seems like it's getting harder and harder on YouTube. For example, you know, this is another thing I was dealing with. I just got a copyright for the Dutch farm using Bitcoin mining to grow tulips and save on energy costs. I'm literally talking about Bitcoin on a Bitcoin channel just for educational purposes, and this channel isn't even monetized. A lot of people don't know that. If you're seeing ads right now, that's not me. That's YouTube just showing you ads because you're not part of the premium service, but I'm not receiving compensation for these ads that you're seeing. So it's not like I'm making money off of clicks. I'm literally just trying to share content. And I know this has nothing to do with the video. I'm going to get to the point. I just want to say, you know, it would be really unfortunate if I couldn't share these videos with you anymore. And I take these risks because I want to show you guys. I don't want to talk about it. I want you to hear it from the horse's mouth. But as they continue to clamp down on these, you know, whatever copyrights, it's just going to get harder and harder. So again, you know, if it's just more videos of me blabbing my mouth for 20 minutes, it's not me, guys. It's the algorithm. It's these guys. They whatever. So that's that. I'm going to move on. It's just kind of upsetting. I'm just trying to share information. So let's talk about the fact that, the doom and gloomers, right? We're going into this recession. And I'll put the TA at the end of the video because it's really boring right now, guys. But I will show you what I'm looking at. But ultimately, look at this. Stocks across Asia and Europe rise on economic growth indicators, right? And we're seeing the job reports coming in positive. They're not able to pull down the inflation to the levels that they want. You have China leading the rally in Asia. You have European stocks at 3 weeks highs led by London. So again, I mean, is this the recession that they're all calling for? Again, I don't know. A broken clock could be right twice a day. I just know it's been almost 2 years now. 2 years of non-stop doom and gloom. And even just since January, Bitcoin remains the best performing asset, still up around 70%. But who's selling? Who's selling? Well, look right here. You can see very clearly that the majority of the sales are coming from short-term speculators, right? You're not seeing these longer-term accumulations. You're not seeing these whales really dumping. And by the way, I want to show you some whale data in a bit. I'm going to get to that in a minute, but I wanted to focus a little more locally on the fact that just recently you may have heard that the SEC will not appeal the decision in its grayscale spot Bitcoin case. Now, I don't really need to go into this article, but, essentially, you had the judge making a decision and saying that you don't really have a basis to have these claims and you cannot reject it. So obviously they're not rejecting it unless they can find another reason to, but the SEC is finding themselves now between a rock and a hard place where eventually they're going to be running out of reasons. I mean, ARK shares, they even adjusted it, right? They communicated with them. For example, you're seeing that the communication between fund managers and the SEC is actually becoming more constructive, right? They're actually finally having conversations. Geez, Gary, what took you so long? In a recent update to the spot Bitcoin ETF from ARK, you had at least 5 pages of new texts that they're basically trying to address. Hey, you have a problem? You have, whatever it is, we're addressing it. We're working with you. We're not trying to do this against your authority. According to Bloomberg report, even you had this guy, what's his name? James Safer is his name? Yeah, James. And he was adding that the dialogue between them is going to open up following the U.S. regulators' decision not to appeal. And on Friday, you had Reuters talking about the SEC opting against appealing in the court ruling, basically when they were talking about it being arbitrary and, what's the word? Capricious. So ultimately, this is leading these guys to believe that there is a possibility of a 90% chance approval by ARK's deadline of January, right? And we also have the grayscale in March. So again, they're running out of time. They're running out of reasons. If you're saying you want to reject something and then the judge is saying you don't have a basis to reject it on, well, you kind of either have to approve it or you have to come up with a whole brand new reason of why you'd want to reject it, right? And again, when you're talking about these types of numbers, these are huge, right? Like, you had James over here, Jamie, just pointing out, what's his name? I forget, Jamie Couts, CMT. And, you hear about this 60-40 portfolio thing, right? If you just move the notch, you go 60-39-1, just 1% to Bitcoin, 60-39-1, right? Now, keep in mind, we're talking millions, we're talking more than millions, we're talking billions and trillions of dollars here. And you could see the total return jumps from 66.19% to 76.77%. Annual return, 6.56% to 7.38%. These are the numbers that these people are looking at. And I know it's not 10x, 20x, we're all in the crypto mentality, but when you're dealing with trillions of dollars and you're looking at a 66% return versus a 70, almost 77% return, these are numbers that become very enticing to these people to allocate these smaller, 1%, 2%, 3%. And that's essentially where we're coming with these, ARK numbers, right? When you're actually having a look at these predictions of this is by 2030, by the way, you have 258,500, 682,800, 1.48 million. Okay, by 2023. Is that actually possible, or is it just a bunch of clickbait? Like, we're just going to say these big numbers, we're going to get eyes, we're going to get people excited. Can you actually sort of come up with a reasoning behind where these numbers, could come into play? And again, this is where this comes in. We had Kathy Wood over on Natalie Brunell's channel, Coin Stories. Again, Natalie, go follow her. Go follow Coin Stories. Please, Natalie, don't hit me with a copyright strike. I swear I'm just trying to share this content out to people. But this is where we have, basically someone like Kathy Wood that is breaking down the numbers logistically, how it could actually come into play based on previous analysis and situations predictions that we already have data to go by.
I really want to hit that $1 million price prediction by 2030. And I have your chart that I pulled up from Big Ideas. I'll probably put it up on the screen if you're watching this on video. The bear case is 258,000 per Bitcoin. The base case, 682,000, and the bull case, 1.48 million as your price target. Can you talk to me a little bit about how your team reached this conclusion? Because folks out there, again, they think they're late, but this shows that, I mean, the compounded growth rate every single year, they're very, very early, and this has a huge asymmetric potential.
Yes, if you look at the little table on that page, you'll see the building blocks and how conservative they are. But I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%. That may have gone down a little. But if we're right, that assumption alone, I have been in the markets for a long time. And as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2, and then they migrate to 5. So I think in this one it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets. Tesla, Square have Bitcoin on the balance sheets, but we make very cautious assumptions, and I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right, and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.
Now, again, I know that people have their opinions on, people like Cathie Woods or Tom Lee or some of these other, guys that have these really big, crazy price predictions. So again, take it with a grain of salt. But again, that is how you kind of see those numbers. We have alley charts pointing out, and this is just very recently, okay? We've had Bitcoin whales buying around 117 Bitcoin in just the past 48 hours, worth about 3.2 million. Whale Alert even pointed out, and this is where I like to follow the data. So we had 1,630 Bitcoin transferred out of Bybit, okay, into an unknown wallet. Again, when you are looking to hold long term, you're not leaving it on an exchange unless you're trading. You're seeing that move into exchanges. We also saw, this is Coinbase volume. I've heard a lot of people talking about the volume. Oh, it's only like 25% of what it was at the bull. Yeah, you don't get those volume spikes really until massive V, you get like the V reversals, which we've had volume showing that. And then of course you have it on the run up, right? The amount of buy volume coming from USA after this ETF news is only a matter of time before markets start to push up, liquidating shorts and triggering the bullish pivot. And I mean, you can't lie that this is in fact increasing. You can even see the spike down there as well, and also pointing out just what's going on with the whales. You've actually seen that the whales numbers have had another huge accumulation day coinciding with all of this conveniently, right? We had what was his name? I can't remember the guy talking about, how he thinks it's going to keep, why can't I remember this dude's name in the last video, the billionaire Paul Tudor Jones, there we go. And he kind of almost like slipped, right? Like as if he knew something about a Bitcoin ETF approval, because he went in the first interview where he was just basically like, yeah, I have an allocation of Bitcoin. I've been holding through it and I think it's going to do really well in a portfolio. And then all of a sudden they interview him again later and he's like, I have a strong feeling that Bitcoin is going to start taking up a much larger percentage of these portfolios, right? Now, is he just talking simply about allocation, or is he talking about the appreciation of the asset itself? Because just simple math, right? If you allocate 1% of your portfolio to Bitcoin and Bitcoin does a 10x, well, now that's 10% of your portfolio, theoretically, right? I mean, assuming that other things also go up. But you kind of get my drift here. And the fact that you're seeing these wallets that are holding between 100 and 1,000 Bitcoin growing, and also correlating with smaller wallets that are graduating to this level. So we're not only seeing, more whales coming out and accumulating, but we're also seeing previous wallets that didn't have 100 Bitcoin in them that have been accumulating, that are holding and have grown above that level, right? So if you have a look at just some of these charts, you want to look at some fun, I guess, hopium, whatever you want to call it. Although you know that I am in the camp of this is a great opportunity for accumulating, not financial advice, but even just simply looking at these bullish crosses like Mags points out on the MACD, you can clearly see the similarities between this bottom leading into 2016 and this bottom. I believe this is the bottom. Some people don't. Some people think we're going to go down. I think it's the bottom. That's my opinion based on what I've seen. But yeah, you're looking at this sort of accumulation phase before a potential blow off. Now, I am going to chime in and say that this does not necessarily mean that a retest, a sweep of some of the higher areas of the lows are not possible. You could still see a $20,000 Bitcoin, but I am just going to say that the likelihood of that is becoming less and less and less. Again, just a simple fractal layover of the Wall Street cheat sheet. I mean, look at this right here. And look at this right here. And you could say to yourself, oh, well, that's just a coincidence. Well, obviously, it's not an exact science. It rhymes a little bit. But ultimately, you know what doesn't change? Human emotion, fear, and greed. It doesn't change, right? I saw this through all of the previous bear markets and all of the previous bull markets. And I was the idiot in the first one who was way too euphoric at the top and way too bearish at the bottom. I mean, when I went through my first bear market, I had a moment where I literally had to sit down. I was up at like 3 o'clock at night, sitting on the edge of my bed. I lean over, I'm talking to my girlfriend and I'm like, I think I screwed up. I think I made the biggest mistake of my life. I think I just wasted a year and a half. I missed out on all these gains and I was this close to giving up. I was that person, okay? But I said to myself, hey, we've come this far, right? I don't really have another plan B. And lo and behold, what happened? We went into the next phase, right? We had that fake out and at 14 down COVID crash and then boom, we hit 70K. But, Bitcoin's dead now because it's higher than the previous all-time high. I mean, guys, stop looking at the euphoria. Stop looking at the top. You have to look at the bottom, right? We've been putting in consistent higher lows, higher lows, higher lows, and higher highs if you really want to be that guy long term. But, rather than looking at Bitcoin going from, 60K, whatever, screw that. Forget the 20K, forget the 60K. Look at the lower levels, right? We're talking about 100, right? And then 1,000. and then 3,000, and then 15,005, right? That's what I'm looking at. I'm looking at the fact that these buyers, these previous buyers, not these short-term speculators, they're the ones that continue to hold, they continue to learn and understand the value, right? And I do have some news articles, a little bit about the US dollar, but, continuing a little bit on what's been happening, I wanted to talk about a little TA real quick. So yeah, I mean, we have fallen out of this upwards channel, but this is something that we've seen before. Again, we're not in the parabolic phase yet. We're not there yet. So it's not uncommon to see these structures broken, potentially bounce around and then do something like this, right? As long as we're not putting in lower levels. And for me, the level to pay most attention to is around 25.3, only because of the area of interest here, right? You have support, you have resistance, you have resistance, you have support, okay? So this to me is building a range. This is building a base, right? And once you build that foundation, it's not very likely, unless catastrophic events ensue, that you can fall back down to those levels. Now, what I think is happening is I think that some of the people that got into this space, especially since the high, they rode it up to 60 something, came all the way down, they freaked out, they lost 50%, it pumped back up, yes, we're going to the moon, only to get faked out on the double top, and then they had to sit there for arguably one of the longest bear trends that we had seen in Bitcoin's history. This can do a lot to you psychologically, but remember, I was that guy. So if you're that person right now, and I know a lot of you are OGs, a lot of you that watch this channel, I've seen some of you guys for many, many years. Thank you for the support. But there are a lot of newer subscribers or newer people to the space that, they just take it day by day and they look at it and nothing's happening and we're down. It's like, but you got to look at the bigger picture. You got to zoom out, right? We've had the indicators on the hash ribbons here. And again, I know I've stressed this, but these indicators have only ever failed 2 times. And one of those, and really did they fail? The one time that it failed was leading up to the all-time high, which then we had the crash. So what was the indicator wrong? Was it wrong saying that, we had this flash up to the highs? No, I mean, we went up to the highs, came back down, same thing here, went up to the highs. So was it wrong? No. Really, in my opinion, the only time it really was kind of wrong was COVID, right? Back here, which obviously was a black swan event. So, that is something to be concerned about. For the positive manner. Now, if you want me to take the bearish case, you want me to be totally transparent and neutral, well, this right here is worrisome. This right here is worrisome because we have never in Bitcoin's history ever seen. Remember, we're looking right here at these blue and pink lines, right? If I zoom in over here, look at the blue and pink lines. We've never ever had them cross. We've had them come pretty close, right? But they've never actually crossed, right? But at the same time, the closer that these lines come historically, the better the opportunities potentially for that accumulation and buying are, right? And the other thing to point out is, yes, we are potentially having this death cross, which we'll have to see how it plays out. Again, I'm not going to pretend to know the answer to something that has never happened before. We've never seen this happen, so this would be a learning experience for everybody. But what we can look at is that these points are all starting to converge right here, right? We're starting to have all this interest. This is kind of here. This is, at some point it's going to come to an apex and you're going to have this extreme storm. I don't know, right around the 27,000 area, roughly. Who knows what the number is going to be on the day that all these cross. But essentially, that is going to put us in a position where once we have all these, things down here, assuming that we haven't fallen back all the way down to the bottom of the channel, because that's bringing us back down to 1,700. And yeah, that would be really, really bad. That would be really, really bad. I wouldn't say it wasn't bad, but all we got to do now is just get back up above this area. We're almost back down to the top of this trend. So if we had a bump and run off of here, that would actually be really, really good for Bitcoin. And what are these like bump and runs that I talk about? Well, people are going to probably tell me that textbook says different, but ultimately what it is, realistically, you have a trend, right? You have these 2 points, you connect them, you get this other area, and then what does it do? The price comes up and it retests it. Right? This is a perfect retest. This is a textbook retest. And look at what happened when it retested. Look at that. Look at that look at that wick right there. Look at that. That was a 12% move, back up to the top, right? So obviously there was that buying. What have we done here again? Well, take the same pivot right here and now come down here. We have multiple points of interest right here. What are we doing? We're having another bump and run, right? So again, this is just showing us that this is normal market structure. We're retesting everything the way that we're supposed to. And we have a longer term trend for money flow moving out of the red into the green than we do with the opposite. So we have these 2 points of contact right here. I do believe we're going to end up putting in a little bit of a trigger wave right here, which could signal that small bit of pullback, right? That little bit of pullback that I said was possible. But this longer term trend that comes all the way back down to when we got this green dot on the market cipher, which, by the way, I don't have the full chart pulled up, but I believe there's only ever been 4 or 5 of these in history. And pretty much every time was an amazing opportunity for accumulation. So yes, we did fall down lower, but we got that wave right here and we got the second wave right here. So again, the shorter trend is showing, okay, maybe you have some sellers that are looking to offload, they're freaking out, they're bored. But the longer trend is showing us that we have the money flow moving to the top and we have so much influence on this volume range right here that, again, falling below these levels, why would you hold, all through this just to finally now be like, okay, we're just going to throw in the towel. We're just going to give up, right? And you can even see over here, if you want to have a look at, these indicators right here, you can also see that we have, again, not exactly the money flow, but, again, when you're down in these super oversold areas, you notice that as we start to come up on this Lux algo, again, marking good opportunities. Now, look, the thing is there was a guy that I was talking over on Twitter with, and he was like, well, you can't say it's a bull run because you don't know if it's a bull run until the absolute end, and then hindsight tells you it was a bull run, or when you break the previous high. So you want me to wait until we get back to 70,000 before we call it a bull run and miss the entire move to the top? Yeah, in hindsight, it's going to be obvious. And right now, it's not obvious. Right now, people are calling for lower lows. They're freaking out. But again, if we're getting scared at these levels and we're not taking these opportunities, could I be wrong? Yeah, I've been wrong before. But the risk versus reward at this point, to me, is leaning heavily in favor of the rewards. Again, you want to wait for this confirmation, right? We break out and we get into the green. Well, look at that. Okay, so you didn't want to buy down here. You wanted to wait until the confirmation. You missed out on a 330% move. Okay, what about this? What about this right here? Okay, so we have the bottom down here, or what we seem to be the bottom. Actually, if you want to take it down here, we can even go down to this $3,000 level. So you want to wait for that confirmation. Okay, so how much did you miss to wait for the full confirmation? You missed almost 850%, okay? Now, currently, we don't have that confirmation yet. So what are people waiting for? Are they waiting for that confirmation again? And if you guys want, by the way, this is the Lux algo. This is one of their premium indicators. You can check this below if you guys are interested. And obviously, if you guys want to learn how to trade, you guys know there's a bunch of bonuses above and all that. But, again, the point I'm trying to make is by the time the general public is in full consensus that the bull run is on, the bull run has already been on. It's already started. And now you're scrambling to throw money at an asset that's appreciating at a crazy rate. So, again, what are these people waiting for? They want a $10,000. What do you want, a 99% discount on Bitcoin? Come on. You really think the market's going to give you that? Maybe. I could be wrong. Maybe there's somebody out there that's just sitting in cash and they're going to scalp up the absolute bottom. But, it makes for fun, sensational stories. But I don't know anyone, even professional traders, who have ever been able to just completely snipe the bottom and completely snipe the top. Come on, guys. Anyway. So long-term trend intact. We have this line, and we also have this newer trajectory which has been formed. These 3 spider lines. None of them have been breached yet, guys. The closest one down here most likely would be around 24. The lowest would be around 21.4. So again, there's nothing in the charts that's showing us that we're going back down to, sub, 18, 17, 16, all those crazy levels. So that's basically where I'm going to leave the TA. But, I did just want to point out that there's more than just what's going on with the charts and everything else. You have these new numbers that are showing the U.S. government spending exceeding its revenue to the tune of more than $1 trillion in just the fiscal year. These numbers are huge. Just Google the difference between like $1 million to $1 billion to $1 trillion. It's astronomical. It's numbers that we can't even comprehend, and we're doing this year by year. The budget of the government's deficit for the last fiscal year has served to $1.7 trillion. Okay, this is insane. The increase in the budget deficit comes as the IMF has actually even expressed concerns over the country's deteriorating fiscal system. You had at the 23 Economic Forum, IMF Director Pierre Oliver calling on the U.S. government to change its approach towards spending and taxes as the country deals with sticky inflation and high interest rates. So again, slowly but surely, people are starting to wake up to things like Bitcoin. You had Anthony Scaramucci, you might know him. He's the managing director of Skybridge, and he used to be former White House director of communications. He was talking about Bitcoin and how he's seeing a 15 trillion market cap, which is like, was that like 30x? Where we're at right now. He explained that the situation is dangerous since borrowed money must be paid back with dollars with more than what was borrowed, potentially causing a severe economic downturn. Therefore, he concluded that the Fed finds itself in a difficult position. So what are they going to end up doing? Come on. They're going to print money again. As a solution, he said an alternative, maybe if you want to print money, but you could look in the form of an immutable asset, which is scarce, transparent, Bitcoin. And he noted that there's really no asset that has all the characteristics of good money except for Bitcoin, which he sees evolving into the major store of value over gold, right? And I just kind of wanted to end on, they had a report that came out from Fidelity, and we're not going to highlight this, but, in Bitcoin We Trust, they kind of broke it down real quick. The ETF is not good. Beware, they're coming to steal your Bitcoin, or like they're going to suppress the price. These are all the things that you're hearing. But really, you can see right here, we talk about Gersham's law, we talk about bad money versus good money, and you can see right here, Fidelity considers Bitcoin to be the best money. You can see right here, the only thing that Bitcoin really doesn't have is its track record. It's too young. But it has durability, divisibility, fungibility, portable, verifiable, scarce, right? It matches all of the definitions of hard money, and honestly, track record, Lindy effect, that just comes over time, right? You also have the virtuous cycle of Bitcoin, right? So what happens? Well, it just continues. You can see right here, you have higher demand, more miners, higher security, more attractiveness, more users, higher demand. See, it just keeps going in this cycle. And as it builds that trust over time, it begins to grow. They also say Bitcoin is the next Bitcoin, which I thought was kind of funny. Bitcoin is anti-fragile. Fidelity puts forward data to prove that Bitcoin is the world's most secure decentralized network. The hash rate just literally hit an all-time high. So yeah, you could try to 51% attack it, but do you have the money to continuously do that? If the government wants to keep printing and keep attacking, maybe they could do that. They're convinced that Bitcoin will retain its kingly position. In terms of market cap for decentralized systems, it is Fidelity's only choice. They also compare Bitcoin to the early internet and how it was confusing, people didn't know how to use it, etc. Even looking at the base layer, like they said, being TCP/IP, some of you guys are watching me on your phones, which are connected to Wi-Fi, which are on top of, this TCP/IP layer. It's crazy, right? DARPA, right? Talk about that. That came out back in the day. Fidelity goes against those who find Bitcoin useless. Bitcoin is aiming to satisfy a clear market need. And finally, they conclude that Bitcoin is unique and should be treated separately from all other digital assets that have emerged since. Just pointing it out, you even had RFK Jr., who was saying he thinks that Bitcoin shouldn't even be a commodity. It should be a currency. That would be amazing. That means you wouldn't be taxed on it. Think about that. Because if you have money and you travel, from the US, you go to Europe, you swap for the euro, and while you're there, the currency changes, right? Maybe the euro becomes more valuable or something like that, or less valuable, vice versa. And then you come back and you exchange back into dollars, and let's say that, it appreciated. Well, you don't pay taxes on that. It's currency conversion. Right? So big things coming, big things happening for Bitcoin. I think this video has been long enough. Ultimately, guys, until we start destroying some of this macro structure, then again, I will continue to maintain my conviction on the current market. However, I'm not an idiot in the sense that I just let my beliefs take over reality. But reality, data, trends, what's going on right now, it's showing resilience. It's showing me that, come on, how many more things are going to implode? What else do you guys want to happen to Bitcoin? We had every bit of possible bad news that literally could have ever come out. Companies going under, FTX, people losing money left and right. The worst news articles you've ever seen, for 2 straight years. And yet Bitcoin is still trading higher than the previous all-time high. The one before the last cycle, obviously, you know what I mean. So I don't know, to me, guys, it would be quite a black swan, which is possible. But again, I don't know what that black swan would be. Because if you can anticipate it, it's not a black swan, right? The black swan, I guess, could have been that little banking crisis that we had earlier. And what did Bitcoin do? It pumped. It pumped during the banking crisis. So that's it for me, guys. Thank you so much for coming back to the channel. Hope you guys enjoy these videos. Natalie Brunell, please do not give me a copyright strike, because if I get another one, I'm pretty much going to never be able to share videos on this channel again. So that being said, you guys rock. You're awesome. I love you. If you do want to learn how to trade, I know now's really boring time, but I always think education is great during these boring times, so you can check those popping up right here, right now. I love you guys. You're awesome. Until next time, stay crypto, and of course, peace out.